Welcome to today's morning report on Thursday, the 2nd of June, with me, Richard Perry, market analyst at Handtech Markets. It is ECB day, and we've got a fairly sort of cautious open to the market, and it's sort of been a slight safe haven pull in the last sort of 24 hours as the dollar has started to correct somewhat. Let me just show you how the dollar index has just started to roll over, and you're seeing that through several of the forex majors. Actually, you're seeing the dollar yen, which has been sharply lower. That yen strength has come on the back of just sort of a reaction really to the announcement from Prime Minister Shinzo Abe that they were going to be delaying the sales tax hike by over 2 years actually, and the market has just sort of taken that as a signal that perhaps the BOJ may not be pushed into further easing, and also a bit of a safe haven move on the concerns of the Japanese economy as well. So that's weighed on the dollar. Not only that, you've got the slight strengthening of the euro as well. That's strengthening of the euro is coming in front of the ECB meeting. That ECB meeting could well be, I don't really want to use the word hawkish, but more positive than many of the meetings that we've had in recent months. Several reasons behind it being the oil price has gone up. You've got slight improvements that are being seen in the eurozone economy now, and it could be that we could see more of an upbeat Mario Draghi today. So that's helping to support the euro. And interesting because Treasury yields are also just slightly just rolling over as well, that 2-year and also the 10-year as well, and that's sort of playing into this dollar correction that we're just seeing filtering through now. Not only that, we've got an OPEC meeting today. OPEC do their biannual meeting every 6 months, and it's being held today. And there's sort of talk of a potential for a production limit, but again, the chances of it coming through are very slim, I think, because Iran are not going to be voting for that, certainly, seeing in that they're trying to increase their production, following on from the years of sanctions. So they're trying to sort of increase those levels that it produces, and that's not really in line with what other countries such as the Saudis, Saudi Arabia, are just trying to move towards a sort of possible production limits once again. So it's interesting to see if that actually comes through or not, but that will be coming out throughout the day today. So we've got several aspects of these markets today, and we're just a little bit of a cautious move on the equity markets. The DAX is falling away. That DAX is my chart of the day. But before I get onto that, I'm going to just take you through the announcements that we got today, because we've got ADP employment report at 1:15. That's expected to just improve slightly to 175,000 jobs, 175,000 jobs. And last month, the ADP pretty much called the non-farm payrolls headline. So that will be interesting to see how that impacts on the dollar today. Also, you've got weekly jobless claims expected to just basically remain around where it is, 270,000. And then into the afternoon, another aspect on the oil price today, expectations of an EIA oil inventories draw of 3 million barrels. So again, negative by 3 million would be supportive for the oil price there. So that's the other aspect on the oil price today. So that takes me to my chart today, and the DAX has been rallied strongly last week, but again turned over. And look at that, basically bang on that fib level, within sort of 7 ticks of that 50% fib level. These fib levels have been consistently strong turning points for the DAX in the last sort of year or so, really, and once again we're seeing that turn lower. Not only that, if you zoom in, you can see that is a bearish engulfing candlestick, which confirmed by yesterday's subsequent losses. And not only that, we're seeing the stochastics rolling over. The last time we saw a stochastic sell signal, we saw a consistent decline for about 2 or so weeks. The RSI just turned lower again from 60. for me, this chart really suggests that the DAX is basically in a sort of long, sort of medium term range now, sort of 3 months or so. It's basically been sort of just drifting sideways. A very slight positive bias within this drift, but look at the sort of the RSI. Every time it gets towards 60, it tends to fail. Every time it gets towards 40, it tends to be a buy. So it's sort of in the unwinding mode at the moment. And look at those MACD lines as well. Barely getting into sort of positive territory before seemingly starting to roll over again. So it just suggests that it's a medium-term range play, and I think you've got to play that range. And it looks as though that it's coming back towards what is now a bit of a pivot line at 10,120. This red line we've got here, which was an old support, became resistance, and you sort of traded through that. So now today that is becoming the support. It's only sort of 40-50 ticks down from where we are now, so if it breaks below that, I think you could expect a continued correction, probably back towards the 61.8% fib level of 9,900 area, and these May lows around 9737 come back into play. So be interesting to see if this correction continues and goes below that pivot at 10,120. But the hourly chart is certainly looking as though it's lost momentum as well. Rolled over following on from that rally. The momentum indicators, the hourly MACD lines are negative, RSI is towards 30, stochastics are negatively configured. It sort of seems to be unwinding this move, and the initial breakout support around that sort of 10,120 mark, but also there's support around 10,080 as well with these old highs. So back below 10,120, I think you can see a further correction. So it certainly seems as though the DAX is entering more of a corrective phase, lower highs, lower lows in the last sort of day or so, couple of days, and that gives you resistance initially at 10,219, but a couple of other levels, 10,283 and subsequently 10,365 being the key high. So I wish you good luck in your trading on the DAX today. Looks like it's a corrective move that is beginning to take hold, so I will speak to you later. Thank you.